Alright, hello and welcome to Camel Finance. I'm your boy Camel, and the G7 has called for Bitcoin or crypto to be held to the same standards as the traditional finance. So this is good. This is, if we're going to see a spot ETF, this is what we need, because if they're going to treat it as something different, then that creates a whole bunch of regulatory hurdles. So that's good. At the same time, Bitcoin is the only one I'm willing to say is a commodity, is a quote from Gary Gensler of the SEC. And that was from CNBC yesterday morning. So things are lining up for finally getting a spot Bitcoin ETF approval. We will see. Virtue is a Gary Gensler front, so that might work. Got to pay these gatekeepers, unfortunately, says Max Kaiser. And so this is in response to Grayscale partnering with trading firm Virtue to convert GBTC, which is the Grayscale Bitcoin Trust, into a Bitcoin spot ETF. So approval next week, it certainly feels more likely than ever before. But as I've said before on this channel, if you've been in the space long enough, then you'll know that it's just been letdown after letdown in terms of the spot ETF. So my hopes aren't super high because of the amount of corruption in the space, but they are higher than they have ever been historically. The small trader call premium minus the put premium is at record lows, and this is below the low of the C19 era. This is below the global financial crisis, 2008-2009. Okay, so is retail right this time to be bearish? Are we going to make new lows in the near future? And by new lows, I'm not talking about a little undercut, I'm talking about deep new lows. Or is this going to be front-run once again, like it always has been historically? You can see here when we're down at these levels, we usually get a risk-on rally come into play. And if you've been watching the channel for any length of time, you'll know that we've been lining this risk-on rally up, and we actually think it's due probably around the 6th to the 10th or 11th to start. So only a week or so away now. So let's keep going. Smart money, dumb money confidence spread. You can see that this is more confidence from back here. The smart money institutions, big deep pockets, are confident that this dip is coming to an end, whilst the dumb money is super pessimistic at the moment. So who's going to follow the smart money? I know I will be. I know if you've been watching the channel, you know I've been calling for this, so we'll wait and see. At the same time, we've got asset manager positioning, all equity futures, percentage of open interest. And you can see, going back to 2011, 2.85%, 2015, 2016, 3.11%. In the C19 plunge, we only got down to 5%, and right now we are a new record low at 2.08. Okay, so this is very significant. We are well below the financial crisis of 2008. We're well below this big drawdown, and this one, and even the C19 plunge. So we got a lot of confluence. Again, if you've been watching the prior videos, you'll know that there's confluence on confluence on confluence at the moment. And I show the Z score every now and again for Bitcoin. This is the realized losses, Bitcoin denominated 60-day rate of change. And you can see historically when we get this big spike upwards and then flip to negative, which it looks to me like we're just about to start thinking about doing, that has historically led to enormous upside for Bitcoin. It's also interesting that this 60-day cycle is playing out pretty nicely with the 60-day cycle that we've been setting up. It's marked on here as the 7th. The Grayscale approval, if it's going to happen, is on the 6th, the day before. So are we going to get this sort of drop into a 60-day low? It'll be slightly early. There is a 10% window either side, and the actual 60-day doesn't come till the 10th or 11th. But I think that this is the right sort of timing band to see a double bottom, or even it could be a sweep, it could be a double bottom, or it could just be a marginal drop down. But I do think that we're going to get some sort of drop down into this 60-day low, and then we're going to go. The transfer volume from exchanges to whale entities tells us that whale activity has been surging on the last move down. Big wallets are noticing there's a lot of cheap Bitcoin available to accumulate, and you can see that by this spike here. Usually when you get these big spikes up, a rally follows. So again, more confluence. Keep in mind, MicroStrategy have 4 billion in Bitcoin. Apple, Alphabet, and Microsoft together have $500 billion, 500 billion in cash, which makes up 19% of the S&P 500 cash holdings. So imagine what happens when these three understand Bitcoin. Make no mistake, they already understand Bitcoin. It's just quite difficult for them to come out and move enormous amounts of money when they are right at the top of the stock indexes into an asset that most people don't understand yet, such as Bitcoin. But they do understand this, and the Bitcoin Core has released an update, and this was a while ago as well. I covered this on the channel. How long ago was this? 2 months ago. They've released an update to the Bitcoin Core to potentially natively support Apple's M1 family of chips. So if you're going to see Apple Pay integrate Bitcoin wallets, this is exactly the sort of thing that you'd expect to see first. And this was found on the GitHub repository, so you can go and look that up if that's your area of expertise. So the mainstream media and the news in general is starting to signal that we may need more money to plan for the second one of these. So this isn't so much important to me as the fact that they're telling us they may need more money. They're sort of laying the groundwork, in my opinion, to print more money. Of course, we know they need more money. They absolutely need to print money because they've got 30.5 trillion of debt and a close to 2 trillion deficit. So they have no choice. They have to hyperinflate this debt away. In terms of these two words at the end here, I have a video I'd encourage you to go and watch. I will put this as I'll put a link to this right at the end of this video. But I think you'll find this interesting, and it sort of sounded like speculation at the time, although now they're sort of telling us what they're going to do, as they always do. They always tell us what they're going to do ahead of time. So if you haven't seen that, I'll put a link in the end of this video. Make sure you go and check that out. Pretty interesting stuff. Back in May, they were telling us that a pause in hikes could be possible by September. It would make sense. And since then, much later, 8th of June, they're saying the Fed may need to pause rate hikes. Well, this is from Stifel CEO. So again, this is in mainstream media. Look, this is CNBC. So I think it's perfectly reasonable. And if you've been following the channel, we've had this yellow line marked up here in September to signify when we are likely to start to see the Fed pivot to a more dovish stance. Now, that doesn't mean they have to go immediately back to undoing interest rates or lowering them. There will likely be a pause first. It might not even be a pause. They might just say that they're ready and willing to support markets and print to prop them up if they crash much lower. Who knows what form the pivot's going to come in, but we do know that they are most probably going to be forced in this neighborhood here to be more accommodative to markets. The futures are up a little bit, not really. Just check this is refreshed. Yeah, it is. So again, if you're watching the prior videos, you'll know I think there's a possible short opportunity if we can make it up into this yellow circle. I'm not looking for a huge plunge down here. I'm just looking for a rejection off of resistance, maybe to form a double bottom, maybe to sweep this low, and then I think we'll actually have a shot at breaking this trend line. And so maybe this will end up being more like this down here. Of course, if we just smash straight through this, or if we consolidate along it and then go, then I will take a long position here. So if you want to see that sort of thing, make sure you subscribe to the channel. The only other thing to update on is I have a silver position open, which, is this going to do one of those FU sweep stops? It looks like it wants to, but it hasn't done it yet. So there's also an opportunity. If we break this trend line, then we can add a position to this as well. That's assuming you haven't got one already. If you were following the channel, you would know that I already have full exposure. I got some in here and then some on a retest. So for me, I'm full exposure, but if you haven't got in, then a break of this trend line would see a nice trade. It would probably look something like that. And that would be a reasonable trade entry. But we do have to be open to the fact that we might get a little stop run before that. Other than that, not much to really say. The dollar looks like it wants to break this parabola at long last, but it's way too early to tell yet. Invalidation, I guess, would come from a trend line break here. So we'll see. We'll see if we can emerge, but we know we're getting close. It's only a matter of time. Ethereum is looking kind of strong, or relatively strong, I should say. So, but I do think that likely as Bitcoin has to drop into this 60-day low round here, I think that we'll probably see that for Ethereum as well. Perhaps we move up and then drop down into it, and then we can go at long last. So we'll see how this goes, but make sure you stay tuned, subscribe if you're not already, and drop any questions in the comments if you've got them. And I will be posting another video tomorrow. In the meantime, look after yourself, look after your family. All the best. Cheers. Bye.